What were the top questions I got asked this tax season? You've got tax questions, I've got answers. Hi, my name is Erica, and I'm a fractional CFO, tax strategist, and owner of Paragon Accountants. I'm here to help demystify taxes and empower businesses to financially thrive. This tax season, I saw questions asked over and over again, so I'm going to answer them here today to help all of you. The first question I always get is, how can I reduce my tax bill? If you're asking me this at your tax appointment, it's typically too late. Too many people only think about their taxes on April 15th, but tax planning needs to happen year-round because the majority of tax deductions have to happen before the year ends. As a fractional CFO, I meet with my clients quarterly so we can manage their tax liabilities and make estimated payments throughout the year, allowing you to both save money and not be shocked by an end-of-year tax bill. At the very least, you should talk with your accountant in late Q3 so you can make the last-minute adjustments before the year ends. The second question I get asked most often is, what is better, a tax deduction or a credit? Generally speaking, a tax credit is more valuable than a tax deduction because it directly reduces the amount of taxes you owe, while a tax deduction only reduces your taxable income by the amount of the deduction. So let's look at how that plays out with this example. If you have a $1,000 tax deduction and your tax rate is 25%, your taxable income would be reduced by the $1,000 and you would save $250 in taxes. On the other hand, because a tax credit directly reduces the amount of taxes you owe, if you have a $1,000 tax credit, the credit would reduce your tax bill by $1,000. Therefore, a tax credit is generally more beneficial because it provides a dollar-for-dollar reduction in your tax liability. However, tax credits have limitations and restrictions based on your income, filing status, and other factors, so you always want to talk with your tax professional to see what's best for you. The third most common question I got this tax season is married filing joint or merely filing separate a better result? And in most cases, filing jointly results in a lower tax bill than filing separate. But there are some situations where filing separately may be more beneficial. When you're filing jointly, you and your spouse combine your income deductions and credits, which can result in a lower overall tax bill. In addition, some tax benefits, such as the Earned Income Tax Credit and the Student Loan Interest Deduction, are only available to couples filing jointly. However, there are some situations where it may be better to file separately. For example, if you have a high-income spouse with significant itemized deductions, filing separately may allow you to claim a larger deduction for your own expenses. Additionally, if you or your spouse has significant medical expenses or other itemized deductions that exceed the standard deduction, filing separately may allow you to claim a larger deduction. It is important to note that filing separately can also limit your eligibility for certain tax credits and deductions, such as the Child and Dependent Care Credit, the Adoption Tax Credit, and the Tuition and fees deduction. Ultimately, the decision to file jointly or separately should be based on a careful analysis of your individual tax situation, taking into account factors such as your income, deduction, credits, and any other tax benefits that may be available to you. Your tax professional should be able to perform an analysis for you and your spouse so your filing status results in the best outcome for you and your family. If you still have tax questions, feel free to contact us, Paragon Accountants. We're here all year long to support you in your tax needs. Like, subscribe, and share our YouTube channel so that we can get greater reach out to everybody out there who's got questions just like you. Thank you.